biggest question I have received from members, gang, is the one we'll tackle here in this update, which is, well, how do we trade this options expiration aftermath? And did it tell us anything about the way in which the remainder of December is going to trade? And I got to say, generally speaking, we're taking a look, by the way, at the S&P futures with the 5-minute chart on the left side and the daily on the right. Take a look at the chop in the 5-minute. And for the most part, we spent a lot of time above the previous session close. We spent a little bit of time below the previous session close. It was not a simple session to say that there was clarity one way or the other. So if you're looking for a really simple way to have clarity on any kind of day, whether that's options expiration or not, where is price in relation to the previous session close is going to be a really big one. And if we can't establish which side of it wants to stay on, that's probably going to be a pretty good cue to leave that symbol alone. Let's do the same thing with the NASDAQ. NASDAQ previous session close. Well, this one's very telling, yes? Take a look at the NASDAQ previous session close, and you'll see where price action was. Let me move this over to the far right edge. There we go. There's your blue line, and there's your blue line here. Okay. Now, where is that previous session close? Way down here. You see that? How much easier was it to say, okay, if we're above the close, this is Thursday, right? Here's your Thursday candle. This, of course, is Friday. Being above that previous session close makes a huge difference. And that line is the same thing that's right here. By the way, if you set your drawing set to default on Thinkorswim, whatever you draw on one time frame will populate on the others, okay? And that's what I do every morning. So we're above the previous session close, a whole lot easier to be a bull on the NAS than the S&P. So choose your fighter wisely, yes? Choose your fighter wisely. ES over NQ? No way. Trade this, not that. NQ. Dow is another kind of tricky one, right? You look at the Dow previous session close. We did spend a good bit of time above and below, right? But when we're above it, I can be a little bullish. When we're below, I can be a little bearish. But again, not as good as the NASDAQ. And the last one would be the Russell. So again, for those of you that are wondering, okay, Rag, I get what you're saying about how to potentially trade that session based on just a sentiment read of being below the previous session close. Clearly the Russell, not only red trend on the 5-minute, but then, definitely after about 11:15, definitely took a turn into the bearish hemisphere. All right. That's another bit of clarity. But what is overall this options expiration tell us? Options expiration is just about today. It exists on an island. It truly does. And it simply means there's going to be gravitational pull towards those thick open interest and or volume levels, price-based volume. Did today's volatility upset any of the trends that we've been talking about here in the Friday video? Not at all. In fact, if you watch the Trade This, Not That video from last Friday, all those trends are intact. And that bullish outlook is still very much intact. A lot of folks are asking, Rog, when could we see a pullback? Powell didn't give it to us this week. So we're just going to have to wait on natural ebb and flow to get us down to volatility support levels or Darvis levels or some sort of retracement. January will be a different conversation, gang. That turning the page from December to January will be a completely different conversation. Right now, strength gets stronger, but come January, especially mid to late, we can start talking about sector rotation. But remember, we are still in a year where we expect 2, if not more, quarter-point rate cuts from the Federal Reserve. It's tough to be a bear in an environment where the Federal Reserve is going to make money cheaper to borrow, cheaper to lend. All right, so XLF, anything interesting here? No, not at all. In fact, it wasn't weak enough. It wasn't weak enough. We really wanted to see a little bit more weakness so that XLF could be bought in the volatility zone. Same thing with Bank of America, by the way. And XLF strength is a big reason why the S&P is a buy the dip candidate as well, whether that be ES, MES, SPY. So nothing changed. In the aftermath of options expiration, usually nothing does change. It's just a lot of gravitational pull to very thick levels of open interest for today, December 15th expiration. And then we go on to business as usual. Business as usual, gang, for the most part, is up. S&P, NASDAQ, tech, communications are looking pretty good. Consumer discretionary, semiconductors are still the strongest sector in all of the land. Industrials have continued to be strong. Financials, we've mentioned that one, continue to be strong. This is what we want to focus on: the outperforming sectors, the outperforming indices, and the outperforming stocks within them. It's a big list, gang. Staying bullish in December is going to continue to work as long as, for whatever reason, if Jerome Powell thinks expectations for March are too high and he wants to tame those and move them out into May, there's going to be a significant pullback, but that will be one to buy. All right, gang, that's a wrap. That's what we've got here. Let's stay the course. Options expiration is an open interest and volume-derived chaotic kind of day, but it's really just a today phenomena. We go back to the regular plan as we go into the remainder of the month. I'll see you in the next update.